Hey guys, welcome back. In today's video, we are talking about how shorts are buying AMC, Citadel increasing their position, the AMC merger, and many more in this video. First, we're taking a look at this. I'm old enough to remember all the baskets with SLV in it along with meme stocks. So this is a very old picture from Wall Street Bets Index, which contained the following. We had AMC, BlackBerry, GME, Nokia, Silver, Doge, and FTT. So this is a picture that people would know if they were here from the very start. And it's very important. It's firstly because what we have to realize is that extreme volatility still exists. Even though the WSB index is gone with FTX bankruptcy, massive irrational squeezes to insane prices remain possible for heavily shorted meme stocks like AMC. But it's not just that. It's also about the stocks that are involved in the basket. So whilst this was talking about the WSB basket, it was very likely that there were many firms out there who had positions built exactly like how it was set up here, maybe with difference to the ratio, maybe with one or two out. But it's very important to know how these stocks are still in there. Now, of course, some of the which we are always talking about are AMC and GME, and we talked about the correlation between the two. You will also see some fitting correlation and some similarities between other stocks, and it's why we've said that the basket may still exist. Another thing to mention is, of course, SLV. Now, we'll talk about this later on in the video, but this is something that we've mentioned about recently, especially with the price of silver, of course, having such extreme volatility. And it's important of why we said that this recent run had many institutions worried about liquidations, worried about their capital, and worried about the margin call that was going to happen. Furthermore, we have to realize this. Ask yourself, if UBS, a Switzerland bank, took on Credit Suisse and exposure to their investments and they locked away what's in those for 50 years, and CS supposedly has a big exposure to AMC short, why would UBS suddenly buy a big party of the float? So what we have to talk about is, of course, Credit Suisse and UBS. And the reason we mentioned this is, firstly, going back to what we've said about this basket as well, is that we've already seen firsthand what people who held these baskets have experienced. Credit Suisse, who held the basket of toxic swaps of AMC and GME, we obviously saw them go into bankruptcy. Now, we knew that those positions were inherited by UBS, and right after inheriting those positions, we saw UBS having struggles. We talked about how regulations wanted them to increase their margins. We talked about how UBS had to sell off other positions. And more importantly, it's the fact we're seeing how UBS suddenly bought a big float of AMC. And the reason why we've said that they very likely have done that is to combat the toxic swaps, is to make sure they can try and hedge against the positions, because they've realized and seen already how damaging these positions are. And they're still doing this in secrecy. They don't want these people to know, because if you take a look at this article about how UBS discusses top themes of media in 2026, what they failed to mention is AMC and a 6% stake that they have in AMC. And the reason why I find this interesting is because, just like we've talked about with the others, all we see in the media is the constant titles telling you to sell, telling you to stay away, and saying about how AMC is destined for bankruptcy and that is not a good company. Those are the articles that we see majority of the time. I would say as much as 95, or potentially for some people even 99%. Now, what we don't see, despite this being the fact, is that institutional ownership has rapidly been increasing for AMC. Just like we've talked about how UBS are buying, and we're also talking about how Citadel are buying, this is something that we have seen. Institutional ownership going up. And yet these articles never mention this. And it's what we've said with why they want to move in secrecy. But more about this, about institutional buying, you can see. Look at what another big short of AMC is doing. Fintel data shows Citadel LLC, the hedge fund, not the market maker, adding more AMC shares. Citadel is hedged for a move upward in AMC with a hedge delta, neutral option position, and even more shares. So what we've seen recently is many short sellers of AMC to have been buying more AMC shares. One of the infamous ones we talked about was Goldman Sachs. Now, this was a while ago, but what's famous about this is Goldman Sachs, who were previously just short on AMC, completely got rid of their positions and went long on AMC. And now we're seeing other positions, other institutions like Citadel to go long on AMC as well. You can see substantial quarter-on-quarter increase to 7.2 million shares, confirms long share build-up plus 172%. We're also seeing the near 1-to-1 put/call ratio, a hedge fund volatility arbitrage play for a protected long strategy. Overall long position with tight hedging through option delta neutral strategy. And so this is what Citadel is doing. Like we've said, they are not the only institutions to be doing this. Firstly, institutions who are not short AMC have just been buying and accumulating as much AMC as possible. Then we have institutions who short AMC and perhaps they didn't create synthetics, so they could exit fully out of their position and longed on AMC. And then we have the firms who have created synthetics, who have been shorting AMC, but yet they're still buying up as much AMC as possible, like Citadel. And this is what we talked about with how these firms seems to be moving in secrecy, and they don't want the media to report anything about it. Because for any article, for any other stocks, if they were to face 5 years of constant negative news and constant shorting, and an institution will start buying, I'm sure many institutions, many media will start covering that news. But for AMC, they've realized that they don't want people to know that institutions are in demand, are in need of AMC shares. Now, another thing that I find interesting about this is, why was this last updated on the 27th of January 2026? Curious what they edited/added since it began early 2021 and edited June 2021. So this is an article talking about mirrored AMC Entertainment Holdings, a synthetic asset tracking real stock prices. Now, we've already know what this is. We talked about the tokens, we talked about all of this, and the very fact that it's still being edited is obviously something that's very suspicious, because what this aims to do, and you guys can see here, by creating collateral-backed synthetic assets on a decentralized protocol, users can obtain verifiable and easily access global financial market exposure without the need for centralized intermediaries. So this is what we have said in the past as well. For those of you who obviously know, is that they essentially have these tokens where they're used as a way of locating AMC shares, despite the fact of actually having a share of AMC. We've seen this with FTX, we've seen this with multiple other crypto institutions as well. And these white papers, these things are still being edited. And the thing that's interesting about this is that this is something that should have been left, ages ago, and yet it still happened now. So it makes me wonder is that they're still using this and they're trying to change things to obviously help them. At a time like this, where especially what we talked about recently, and you can even see right now, AMC as of today is up 1.44. We were up even higher, but the suppression is obviously happening. But we talked about how AMC were consolidating and it was looking for upward movement, and it instantly met with this. And the fact we're seeing edits of these white papers, it makes me curious to what is actually going on behind the scenes. Now, a big thing as well, and this is still obviously, this is just talking about AMC in general, but this is the reason why this is being mentioned is obviously because of GME. But whoever buys AMC or completes a merger through debt-to-equity swaps is buying the largest global theater operator and the only one with an established proven distribution arm, ahead of the largest annual box office release since the pandemic. So we talked about the potential of AMC, and like I said, the reason why we're mentioning this is because of what has been mentioned recently with GME. Firstly, if we take a further look into this, we see this from Charles Payne, who says, "I'm not going to interview Ryan Cohen today. Ryan's working on something monumental and he will not be able to say much." And so this is what Charles Payne is saying with how GameStop is obviously eyeing a major acquisition. Now, this acquisition is still unfolding. There is still so much more to this, because firstly, what we talked about is this. Perhaps we are looking at, because it is said never been done before, quote by Ryan Cohen, what we could be looking at is a hostile contested mega deal of a much larger mainstream consumer name. Now, what I've read in terms of rumors, and I don't want to cover this because it's still a rumor, is that people are saying eBay. Now, is this true or not? Of course, we don't know, but it is something that's in the air. So this is in terms of talking about a much larger mainstream consumer name. But there is more to this, because Michael Burry has also said that he could also do a multiple company simultaneous acquisition with revenue synergies between the three and issue debt of the acquired company. And so this is what we've said with why AMC merger acquisition, the M&A deal is still potentially there, or at least that's what we talked about. Now, in the past before, we mentioned as well about how there were potential partnership deals between AMC and GME already. And now with what AMC and GME has gone through in the past few years, with what the media, with what especially on Twitter, the apes have obviously been doing, it wouldn't surprise me for something like this to happen. And it's why we talked about how it could be very powerful. One of the things I've always mentioned is talking about the pros and cons between the two companies. And this is something I've always said, and I'll stay by this, and I've said is that AMC has an extremely good operational structure where their business is obviously doing well. However, they lack the money like GME. They don't have billions of dollars like GME does. However, on the other hand, just like we've said, GME has billions of dollars, but in terms of operational structure, they don't have it done as well as AMC. And this is what I said with how the two combined together can be put in a very good position. Now, amidst of all of this M&A speculations, we're seeing GME having very good movements as well. And once again, you can see the correlation of when GME moves, we see AMC move. And when AMC move, we see GME move. And that's because we are in the same basket of shorts. And so when one's having effect, it pushes them down and it allows us to have the ability to obviously move upward. Another interesting thing is how the GME warrants are up close to 20%, with nearly 1 million being traded in the first hour of trading. So as we see this goes up, it's obviously talking about the demand for GME shares, the ability to exercise these warrants. And so it feels like they are expecting the price of GME to go up even higher than where we are right now. So this is obviously very good news as well. Now, another big thing for apes and for AMC as well is talking about HYMC. Now we are seeing things like this 6 to 8 months before $500 per ounce of silver. For HYMC, expect explosive moves up. HYMC share price range $200 to $700 per share, exploration boost, and multiple majority hike of multi-bagger if the silver thesis is right. And so this is what we're talking about. Now, many of you may be worried because of the investments. Like we've said, AMC has done well. And this is why, once again, people talked about how AMC, how Adam Aron sold early. You have to realize he is in this investment risk-free. So he is not experiencing any worries right now. It's not eating into the cash. And it's one of the biggest things for why I've said that it was very important to do what he did. But aside from that, if we're talking about how people are perhaps worried, some of the things to look at is, of course, firstly, if SLV was so heavily shorted last Friday, then why didn't SLV borrow rate spike? Kind of smelling the good old Wall Street trick of fabricating fake shares off exchange here. So we're seeing SLV, obviously, and once again, going back to what we said at the start of being the basket, and why I said there's relationships, is that we're also seeing that thing, we're seeing SLV being rehypothecated, perhaps, we're seeing it being suppressed. And this is what we said, the reason why this is happening is because if there are still baskets that exist out there where they are shorting AMC and SLV, it makes sense for why they will do this. And it's also talking about why the price of silver going up, why the price of SLV going up is having detrimental impact towards these short sellers. Because just like what we said with the example of the GME and AMC, is that when they're in the same basket and one heavily shorted stock is seeing the momentum is going up, they will have to put more resources to try and even suppress it. And by doing so, they allow all the other shorter stocks in the basket to also go up, which then has even more effect on them. And so that's why they need to suppress SLV. You can also see JP Morgan is being accused by multiple parties for manipulating the silver market. This is something that they have previously been penalized, and so it wouldn't surprise for us to see this. And so once again, talking about why the price of silver dropping isn't because of natural, isn't because of supply and demand, but more because the institutions that are involved in this. But aside from that, we're still seeing massive volatility. We're still seeing how gold and silver is on their way back. Once again, I'm looking at this in the long term. First, we have to remember that silver has already had a crazy run. So a pullback isn't something that's surprising. It's talking about whether the thesis is still there. Is the supply and demand still there? Because you can see here, Bloomberg calls the paper silver drop the abrupt unwinding of a record-breaking rally. But this article doesn't question the growing paper versus physical disconnect or the extreme paper selling compared to annual global mine output. And it's just talking about the importance, like we've said, with the supply and demand, how the thesis is still there. And you can even see here the suppression coming, how the bankers are playing the same scheme today, where silver peaked exactly at LBMA price benchmark. And so this is just me on why I think the silver prices will continue to go up, why I'm not worried about the short-term thing. Another thing to be really worrying about is how Nvidia's plan to invest $100 billion in OpenAI has completely stalled. And this is what we talked about with the potential bubble of the whole AI valuation to actually be going down. And if that does go down, we are seeing hundreds of billions, if not trillions of dollars of collaterals disappearing. And that's when the shorts are going to start panicking. As always, none of this is a financial advice, so do take our Instagram result. Make sure to do your own due diligence and research. And I'll catch you guys next time.